We always hear the expression buy low, sell high, but how do you know those stocks aren't going to just keep selling off? We're going to be talking about how to buy those dips. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. For those of you that don't know who I am, my name is Carter and I've been a full-time swing trader for about 6 years. And with that being said, I have a brand new swing trading course where we talk about how to find those stocks, my strategies, my mindset. It's a one-stop shop for all of your swing trading needs. There's live streams, quizzes, lectures, all that stuff. I'll put it down below. You guys can use code YouTube to get 20% off. So at least check it out. But guys, let's dive into this. Let's go. All right, so like I said, we always hear this expression, buy low, sell high. But how do you find those stocks that are on the low and that aren't gonna just keep selling off? We're gonna be looking at it. We're gonna turn to the computer and see how to evaluate those types of stocks and how to effectively buy the dip. All right, so the charting that I'm using is actually with a broker that I use. It's called Moomoo. Now, the reason why I love them is because you can pretty much do whatever you want with the chart, so you can understand it as easy as you can. So when it comes with effectively buying the dips, so for me, I think that you need to find stocks that are on support line and stocks that have some sort of indicator or indication where we could see a possible reversal. So I pulled a stock up, NIO. Now looking at it here, I drew out two lines. One here at about $7.14. The second line at about $8.44. Now looking at it, you guys will see that we've seen tendencies of getting a lot of buying pressure at this line. So effectively, you could hypothetically buy these stocks on this line, also known as a support line, and try to sell them at the resistance at 844. So looking back, you guys will see it hits it once, buying pressure, twice, we got buying pressure, 3 times we got buying pressure, 4 times we got buying pressure, and then recently it hit it 5 times. So as a trader, whether you're a day trader, swing trader, the biggest thing is managing your risk tolerance. So how do you pretty much go about doing this? So for me, what I do is I always try to trade stocks that have a very, very good risk and reward ratio, anywhere from like a 2 to 1 or 3 to 1 and higher. So pretty much what we could do is set our stop loss, so the max amount of money we are willing to lose on this trade, just below $7, right? You guys will see I'm going to set my stop loss just below $7. Now, why I did that is because whole dollars and half dollars act as harder support and resistances. So like $7 flat is going to be a harder support than, 705 or 694 or something along those lines. So I always set my stop loss below whole dollars or half dollars. Same thing with like 50s. So like 750 is going to be a harder support or harder resistance than like 730. All right. Another thing we want to do, so we set our stop loss. We set our stop loss at about 695, 694. So we're virtually risking about 30 cents, about 25 cents to possibly have this stock go back up to highs, right here from 715 all the way up to about 850. That would be that resistance. And the reason why we call it the resistance here is because we've gotten tendencies of getting sell-off there, right here, and looking at it, you guys will see we have this blue line. That blue line, when the stock is below it, it has tendencies to act as resistance. So if we actually zoom out, I'm sure you guys will see when the stock falls below it, it has a hard time breaking above it, right? If we look at it, you guys will kind of see, we've just seen tendencies of it using it as resistance in the past. So that's why we would try to sell it as close as possible to that line, okay? That 90 moving average line, as well as the 200 moving average line. The 90 moving average line is going to be a lesser support or resistance than the 200. The 200 will always be the strongest resistance, strongest support that we see. That's just kind of the way it is. You guys see it hits it once, twice. So we understand there's a lot more resistance at the 200 than the 90. So, in an ideal world, we could hop in at 717, setting our stop loss at 695 and seeing if we could get some buying pressure back up to, 840. That would be a dream situation about effectively buying the dip, as well as another indicator that I absolutely love is something called the RSI line. The RSI line is also known as the relative strength index. So in simple terms, it determines if a stock is overbought, oversold, undervalued, or overvalued. So as we zoom out, right, what do you guys notice about that line, right? It's still there. Every time it hits this price, we get tendencies of getting buying pressure, as well as that RSI line is down here. Okay, this green little squiggly line. Looking at it, you guys will see every time it's below a 25, right? Let's just go ahead and look at it. Every time it's below, 25, or even let's just go 30. Anytime it's below a 30, what do we see? Okay, let's go ahead and we go. Okay, right here. Okay, we got buying pressure. Let's continue to go right here. This right here is at 26. We got a little consolidation as we go out. As we continue to go right here, what did we get? We got buying pressure. More buying pressure. So as we look at this indicator, you guys will see that we see tendencies of getting a lot of buying pressure when it falls below a 30 on the RSI line, which could be another indication that we have more buying pressure starting to enter. Now, as swing traders, this is super important, because you want as many indicators going in your direction as possible. The only thing that I really don't like about this stock as a swing trader is just this trend. You guys will see we have just this general downward trend. That is one of the only indicators that I really don't like. But the only reason I would look at trading this is because as we zoom into the past, 3 months, it's been a pretty flat stock. The only thing I would do when we have a downward trend is just tighten up your stop loss and take profits a little sooner. If not, use like a trailing stop loss. That would be a better alternative than possibly not taking the trade at all. But this is a simple strategy and simple, approach that you can use when it comes with effectively buying the stocks that are on the dip. So guys, I hope you guys all enjoyed it. If you guys did, hit that like button and subscribe. Don't forget to check out my swing trading course, and we'll see you guys tomorrow in the next one.